Welcome to Talk Tickers, the show that takes you deep, deep into those earnings calls so you don't have to.
Exactly.
And today,
Buckle up.
yeah, today we're diving into the world of clean transportation technology, folks. We're talking Westport Fuel Systems, their Q3 2024 earnings call. You know these guys, right?
Yeah, they specialize in alternative fuel systems.
Yeah, so we're talking natural gas,
Propane,
even hydrogen, the whole shebang.
the whole 9 yards.
We got the call transcript right here. We got a stack of reports. We're ready to go.
Yeah.
What's really interesting to me about Westport is they're not afraid to just really explore all these different avenues in clean transportation.
Yeah, and that's what makes their story so relevant right now, right? I mean, an entire industry is at this crossroads trying to figure out which technologies are going to win out, which ones are going to dominate. So it makes their story even more intriguing to follow.
Right. It's like they're putting chips down on multiple squares of the game board, trying to see where the puck's going to go.
Yeah.
So let's start with the big news, right? This was the first full quarter of operations for CESPRA, that joint venture they have with Volvo,
Right.
focusing on the heavy-duty engine tech.
Yes. And CESPRA spun off with Westport's high-pressure direct injection technology, HPDI, designed to make those big rigs, run cleaner, be more efficient.
Yeah.
And they didn't just spin off, they hit the ground running.
Okay.
CESPRA brought in $16.2 million in revenue this quarter.
Okay, $16.2 million. Is that good? Like, put that number in perspective for us.
Yeah, so not only did CESPRA exceed the revenue from the same period last year, when this tech was still part of Westport,
Right.
but it also indicates a growing adoption of HPDI. And that's a win for cleaner, heavy-duty transport.
So, good news for CESPRA. But what does this mean for Westport going forward? Like, are they going to hurt themselves by spinning this off?
That's the big question a lot of analysts are asking. Westport needs to show that they can thrive, even without this heavy-duty HPDI business. But the early success of CESPRA might actually benefit them. It could attract investors to Westport as well.
That's a good point.
Yeah.
Speaking of investors, Westport's been working hard to improve their financial health.
Yeah.
They implemented some pretty serious cost-cutting measures.
Absolutely. And this is where we see some of those Blinkist-worthy insights from the call.
Yeah.
They slashed R&D and SG&A expenses by a whopping 40% compared to last year. So that's not just trimming the fat. That's major restructuring.
Wow.
And it's already having a positive impact on their margins, which we'll get into later.
Okay, so the cost-cutting seems to be working. What about revenue beyond CESPRA? Weren't they working on a big deal with a Chinese engine manufacturer, Weichai Power?
Right. That agreement has been in place for a while. It was seen as a major growth opportunity for Westport.
Huge, yeah.
But they revealed during the call that they haven't received any significant orders against that agreement yet, and they are not expecting them this year.
Okay, hold on. Red flag.
Yeah.
Should we be worried?
It definitely raises questions. It could signal that the Chinese market for Westport's technology isn't as strong as they anticipated, or that Weichai is facing some internal challenges. It's something to watch closely.
All right, so we have CESPRA exceeding expectations, cost-cutting showing results.
Right.
But this big question mark over the China deal, what's the story with their light-duty segment? Any bright spots there?
Actually, yes. Their light-duty segment is performing quite well, driven by growing demand for LPG fuel systems in Europe. LPG,
Yeah.
stuff we use in our backyard grills.
The propane, yeah.
Yeah, propane. It might seem old school, but it is cleaner and more cost-effective than traditional gasoline.
So are they selling propane tanks to European drivers?
Not quite. They're providing the technology that allows vehicles to run on LPG. They just started production for a major European OEM,
Right.
and they're expecting to exceed their delivery goals for 2024. Plus, they're making some interesting moves, like partnering with Kia Italy to launch a hybrid vehicle that can run on both HEV and LPG technologies.
I read about that, the Kia Nero Tri-Fuel. It gets like 1,600 kilometers on a single tank.
Almost 1,000 miles. It's a road trip dream.
Right? It's incredible.
It shows how LPG could be a really viable alternative fuel solution, especially with gas prices being what they are.
Right.
And Westport's in a good position to capitalize on this trend.
Okay, so they've got LPG gaining traction in Europe. But what about hydrogen?
Yeah.
It seems like everyone's talking about hydrogen as like the fuel of the future.
It's the hot topic, for sure.
Yeah, is Westport missing out?
Well, they've acknowledged that development of hydrogen infrastructure is moving slower than anticipated, which could delay widespread adoption of hydrogen-powered vehicles.
Yeah, it's that chicken or the egg problem, right?
Yeah.
You need the cars to justify the infrastructure and the infrastructure to support the car.
Exactly. It's a classic dilemma.
Yeah. So where does this leave Westport in the hydrogen game? Are they throwing in the towel?
Not at all. They still believe in the long-term potential of hydrogen, and they're continuing to develop fuel system technologies. But they're realistic about the challenges. They're not putting all their eggs in the hydrogen basket.
So it's like they're playing a strategic game of chess, across multiple fronts.
Exactly. Diversifying their portfolio, hedging their bets, adapting to the ever-changing landscape of the clean transportation industry.
Okay, so we've covered CESPRA's launch, the cost-cutting measures, the uncertainty with Weichai, the light-duty success with LPG, and then the hydrogen slowdown. Anything else major from this earnings call we need to hit?
One more thing, and this is where the recent U.S. election gets interesting. Westport believes that the election results could create opportunities for growth in the natural gas vehicle market, particularly in the U.S.
Interesting. Why is that? What's the connection?
They see potential for policy changes that could favor natural gas, which could lead to increased demand for CNG solutions.
CNG, compressed natural gas.
Exactly, another alternative fuel option, and they're already in talks with North American OEMs, hoping to capitalize on this potential shift.
So they're looking to ride the CNG wave in the U.S. They're really covering all their bases here.
It's a smart move. By staying agile and exploring different avenues, they're increasing their chances of success in a market that's still very much in flux.
Well, it sounds like we got a lot to dissect here. CESPRA taking off, cost-cutting working, but some uncertainty around China and the hydrogen slowdown, and now this new wild card, the U.S. election and CNG.
It's a complex picture, but that's what makes following Westport's story so fascinating.
Yeah.
They're a microcosm of the challenges and opportunities facing the entire clean transportation industry.
Absolutely. So in the next part of our deep dive, we're going to get into the nitty-gritty financials. We'll break down their margins, cash flow, and see if those cost-cutting measures are truly sustainable. Then we'll wrap things up with our favorite segment, This Is Not Financial Advice, where we'll cook up some outrageous but plausible trade ideas inspired by this earnings call. Stay tuned.
All right, let's shift gears a little bit here and take a closer look at the financial side of things.
Yeah.
Remember, this was the first full quarter with CESPRA operating independently.
Right.
So the numbers might look
A little different?
a bit different than usual.
Yeah, it's like we're trying to solve a puzzle where some of the pieces have changed shape.
Exactly. That's what makes it a challenge.
Yeah.
So Westport reported revenue of $66.2 million for the quarter.
Okay.
A 14% decrease compared to the same period last year.
Okay. A decline in revenue. That doesn't sound too promising.
Right.
Did the cost-cutting measures just not work?
Well, not necessarily.
Right.
It's important to remember that this decline is largely attributed to the heavy-duty OEM business being transferred over to CESPRA.
Right.
So if you factor in CESPRA's revenue of $16.2 million, the overall picture looks a bit more stable.
Okay, so it's not a shrinking business, just a shifting of revenue.
Exactly.
Okay. But what about profitability? Like, did they actually improve their margins despite this shift?
They did. Gross margin increased to 22% of revenue, up from 17% in Q3 of 2023.
That's a pretty significant jump.
Yeah.
What drove that? Was it all cost-cutting?
It's a combination of factors, really. Increased sales volume in their light-duty business, particularly in Europe, played a role. Also, a favorable shift in their sales mix, with more sales going to European customers who tend to have higher margins.
Right.
And then, of course, those cost-cutting measures starting to make a real impact.
So it's like a triple whammy of positive developments.
Yeah.
Higher sales, a more profitable mix, and lower expenses.
Right.
Sounds like a recipe for success.
It does.
But what about the bottom line, though? Like, did all these improvements actually result in a smaller EBITDA loss?
They did. Westport recorded an adjusted EBITDA loss of $800,000 for the quarter.
Okay.
Which is a significant improvement compared to the $3 million loss they reported a year ago.
Wow, that's impressive. They're really moving in the right direction.
Yeah.
They did mention, though, during the call, a pretty significant increase in inventory.
Right.
Was that a red flag?
Yeah, it's true. Their inventory increased by almost $10 million compared to the previous quarter.
Wow.
However, they explained this was due to a ramp-up in production
Okay.
to support those anticipated Euro 6 kit deliveries
Right.
that we talked about earlier.
Right.
And they expect to ship those kits in Q4, which should reduce the inventory levels.
Okay, so it's not a systemic problem. It's a temporary.
Exactly.
Okay, that makes sense.
Yeah.
But what about their cash position? Can they keep, operating without having to raise more capital?
Yeah, especially with all these investments in new technologies.
Yeah, true.
That's a crucial question.
Yeah.
At the end of Q3, they had $33.3 million in cash and cash equivalents,
Okay.
which is a decrease of $8.2 million from the previous quarter.
So they are burning through cash.
Yeah, they are spending money to grow,
Right.
but that cash burn has to be managed carefully.
For sure. For
Yeah.
sure. What are they doing to address this?
Well, they've outlined plans to reduce inventory levels back to normal by the end of the year,
Okay.
which should free up some cash.
Makes sense.
They're also actively exploring ways to improve collections
Okay.
on accounts receivable
Right.
and optimize their payment terms
Okay.
to further reduce working capital.
So tightening the belt.
Exactly, looking
Yeah.
for efficiencies wherever they can.
Right. It's like being on a budget.
Right.
You got to make sure your income can cover your expenses, especially if you're making big purchases.
Precisely. And they're also being cautious about tapping into their ATM offering,
Right.
which allows them to sell shares to raise capital if needed.
Right.
They haven't sold any shares under that program since it was established in mid-September.
So they're treating it as a last resort.
It seems so.
Yeah.
They're really focused on improving their financial performance.
Through operational improvements.
Exactly.
Okay, smart move.
Yeah.
But back to the cost-cutting measures. Are they sustainable? Can they keep slashing expenses without hurting their long-term growth?
That's the million-dollar question.
Right.
While they've achieved significant cost reductions in R&D and SG&A,
Yeah.
it's crucial that they make sure that these cuts don't stifle their ability to innovate
Right.
and compete in the long run.
Right. It's all about finding that balance, right?
Absolutely.
You can't just cut your way to success.
Exactly. You got to invest in those things.
Yeah.
That will drive future growth.
Right, right. And this kind of brings us back to some of the key questions that we were talking about earlier.
It does.
What's the future of CESPRA?
Right.
Will they be able to secure that second OEM for their HPDI technology?
Yeah.
What will happen with that Y-Tri partnership? Will they be able to penetrate the Chinese market? And how are they going to navigate the hydrogen slowdown while still staying ahead of the curve?
So many questions.
Right.
And unfortunately, we don't have a crystal ball
Yeah.
to predict the future.
If only.
But that's what makes following Westport's journey
So fascinating.
so intriguing. It's a story of innovation, adaptation, and the constant pursuit of a cleaner, more sustainable future.
Absolutely.
And we'll be watching closely to see how it unfolds.
For sure. Well, that wraps up part 2 of our deep dive into Westport Fuel Systems Q3 2024 earnings call. Now, for the grand finale, we're going to put on our speculative hats,
Yeah.
explore some outrageous but plausible trade ideas inspired by this earnings call.
Yes.
Remember, folks, this is purely for entertainment purposes.
Absolutely.
Definitely not financial advice.
Not at all.
All right, it's time for everyone's favorite segment. This is not financial advice, but
The disclaimer.
yeah, the disclaimer where we just let our imaginations run wild. We come up with some trade ideas inspired by the call. Just, again, folks,
Purely for entertainment purposes.
yeah, purely for entertainment. We're not suggesting you actually make these trades. Some of these might be downright crazy.
Some of them might be insane.
Yeah, but it's about thinking outside the box, exploring potential market disruptions, having a little fun with this information.
And a little fun, exactly.
Yeah. So are you ready to put on your speculative hats?
Let's do it. I'm always up for a good thought experiment.
All right. So here's one that's been bouncing around in my head ever since we talked about that slowdown in hydrogen infrastructure development, right?
Right.
What if instead of waiting for the hydrogen highway to be built, Westport focuses on like niche applications
Yeah.
where hydrogen infrastructure isn't such a barrier?
Interesting. So you're thinking about scenarios where the demand for hydrogen fuel is concentrated, localized. They
Mhm.
wouldn't need this nationwide network of refueling stations.
Exactly. Think like forklifts and warehouses,
Hmm.
maybe even small-scale power generation for
Yeah.
remote communities.
Okay, yeah, I see what you're saying. So Westport could leverage their existing hydrogen fuel system technologies
All right.
adapt them for these specific applications.
Right.
They could be a dominant player in these niche markets while the broader hydrogen infrastructure catches up.
Right. It's like a stepping stone approach.
Yeah.
Master these smaller, more contained markets, prove the viability of their hydrogen tech, and then, boom, be ready to pounce when the big opportunities come.
Yeah, it's a way to mitigate risk while still staying ahead of the curve. They could carve out this really profitable niche
Right.
while everyone else is waiting for that hydrogen highway.
But, okay, here's another one. And this kind of builds on that whole idea of the U.S. election potentially boosting the natural gas vehicle market.
Yeah.
What if Westport goes full-on Americana
Okay.
and partners with like a classic American truck manufacturer,
Right.
like, say, Ford,
Ford.
the S-Series?
Yeah, the best-selling vehicle in America for decades.
Right. What if they collaborated
Oh,
and created like a CNG-powered version of the iconic F-150?
a CNG-powered F-150, that would definitely shake things up.
Right.
You know, directly challenge gasoline and diesel in the truck market.
And think about the marketing,
Oh, yeah.
right? You could market it as this patriotic pickup,
Yeah.
appealing to the eco-conscious consumer
Right.
and those who want to buy American.
It would be a really smart strategy, tapping into those deep-seated emotions and associations. And it makes sense on a practical level, too, right?
Of course.
Fuel costs, always a concern for truck owners.
Yeah.
The potential for lower fuel expenses with CNG, that'd be a big selling point.
Huge, huge. And it could help Ford meet those increasingly stringent emissions regulations
Right.
while still offering a powerful and capable truck that people love.
Yeah, there would be challenges, of course.
Right.
Refueling infrastructure, CNG stations aren't as ubiquitous as gas stations.
Right. But that's where strategic partnerships come in.
Yeah.
Maybe they team up with a fuel provider
Okay.
to roll out CNG refueling stations along major trekking routes.
Right.
In areas with a high concentration of potential customers, it could be a win-win.
I like where you're going with this. It could create an entire ecosystem around these CNG-powered vehicles, make them more practical, more appealing. Imagine, pulling up to a truck stop.
Yeah.
You see a row of CNG pumps alongside diesel and gasoline. That's a powerful symbol.
Right. A sign that things are really starting to change.
Yeah.
Okay, one last out there idea
Okay.
before we wrap things up.
Okay.
Remember how Westport mentioned that they're seeing this renewed interest from North American OEMs
Yes.
for CNG solutions?
Yeah, they're optimistic about the growth in that market.
What if, and this is where it gets really speculative,
Okay.
what if they're not just talking to traditional like car and truck manufacturers?
Okay.
What if they're exploring partnerships in other sectors?
Give me an example.
Think about like the agricultural industry.
Okay.
Farmers are always looking for ways to cut costs, become more efficient.
Right.
What if Westport partnered with, say, John Deere
John Deere.
to develop CNG-powered tractors, farm equipment?
That's an interesting angle. Could be
Yeah.
a huge market,
Yeah,
especially as the ag sector faces more pressure to be sustainable.
absolutely.
CNG could offer this cleaner, more cost-effective alternative
Yeah,
to traditional diesel fuel.
and it plays into that whole support American farmers thing.
Oh, yeah, absolutely.
Right.
Imagine a John Deere ad campaign with these CNG-powered tractors helping farmers feed the nation, reduce their impact.
John Deere goes green with CNG technology.
I like it. Of course, there would be, logistical challenges,
Right.
ensuring a reliable supply of CNG in these rural areas.
Right.
But if they can figure that out,
Yeah.
it could be a game changer.
It could be huge for Westport and the entire industry.
Yeah.
Well, I think we've gone far enough down the speculation rabbit hole today.
Yeah, we've gone pretty deep.
Hopefully this is not financial advice, but has given our listeners some food for thought.
Yeah.
It's about considering all the possibilities,
Yeah.
exploring the different angles,
Right.
and just remembering that sometimes the most outrageous ideas
Yeah.
can lead to the most groundbreaking innovations.
Absolutely. And while we've had some fun with these scenarios, important to remember investing involves real risks, requires careful consideration.
Of course,
Always do your own research.
couldn't have said it better myself. Well, that wraps up our deep dive into Westport Fuel Systems Q3 2024 earnings call. We covered a lot of ground today. CESPRA's successful spinoff, the uncertainties surrounding that Weichai partnership, the growth of LPG in Europe, the hydrogen slowdown, and the potential impact of the U.S. election on the CNG market.
It's a complex and ever-changing landscape.
Yeah,
But that's what makes following the clean transportation industry so fascinating. Companies like Westport are really at the forefront of this transformation.
Right.
Their journey is far from over.
So whether you're a seasoned investor or just a curious listener, keep an eye on Westport Fuel Systems. They just might surprise you. And until next time, thanks for tuning in to Talk Tickers.